Welcome to the Real Estate Trifecta. This is Carlos Salinas, Mr. You Don't Need 20%, with Signature Premier Properties. And to my left, I have...
Kevin Spann, the insurance guru. You already know.
See, I thought last time we did this, we were going to have some sort of agreement that I wouldn't follow Mr. What did I say? The Luther Vandross of podcast is...
Big Luther, not little
Spann.
Luther.
Guys,
Big
too
Luther.
smooth. But I'm Lou Soriano, CFP, and I'm happy to be here once again with you guys.
Absolutely. First episode is dropping today, actually. Please, give us a chance, give us a shout, let us know what you think. The Real Estate Trifecta at gmail.com. On the gram, it's going to be the Real Estate Trifecta, and on Spotify as well.
Tell a friend.
Yeah. So, lot going on. I mean, It's a lot happening since we met last time, and I think what we're going to do, Lou, we'll start with you.
Okay.
I mean,
there's a lot.
You gave us a lot.
Yeah, there's so
gave
much.
Us a lot.
But I'll tell you what, I don't want to hog up the show because we could go on and on just news actually that dropped this week, right?
Go for
it.
Talk, Lou.
On the personal side, and I'm going to just stick to taxes for today. I don't want to get into investments too much. But on the personal side, there's been some rulings as far as people who filed tax returns early in the tax season who had unemployment compensation included in their return. Well, as of 2 or 3 weeks ago, they passed a law where $10,200 of that income was excluded for tax purposes. So what do you do if you filed your tax return in early February and this news came out? Well, a lot of people want to amend returns. The IRS is encouraging you to not do that. In fact, that will only delay things. So do not file an amended return. However, they are talking about making those adjustments this week. So you might see some additional refunds either by direct deposit or
automatically.
Automatically, yeah. So the IRS is doing it. You don't have to do anything.
Right. Perfect.
So this is another reason why the IRS extended the tax filing deadline to May 17th this year. And then, of course, there was like a big rollout. Joe Biden spoke. Of course, listen, when I talk about politics or presidents, it's just to talk about the news, right? 100%. So that's all we're sticking to here. And the news Joe Biden came out with was his tax plan. And two things that I think are huge for as far as real estate. This is the real estate trifecta. So two big items that I think we should tackle is 1031 exchanges.
Yep.
There's some talk about not having 1031 exchanges anymore. I could explain that in a second. And also eliminating the step up in basis. So, those are two big things that will affect real estate, whether you're on the investment side, personal side, anything along those lines. So,
Lou, just
pretty
one
big.
question. I know, Los, you probably got the same thing. You talking taxes? I thought you was going to talk about the stimmy. What's up with the stimmy?
Oh, man.
What's up with
I could go on and on about that, too.
What's up with the chat?
Let me tell you something. I don't want to know anything else about this.
Giraffes in my backyard, bro.
Yeah, no. Let me tell you. And I love helping people, right? But this stimulus stuff is driving me crazy because it's based off of the first two rounds were based off of either your 2018 or 19 return.
Right.
Now you got a third round coming out. And you know what's interesting? You have so many young adults out there who are, let's say you were 21, 22, you were filed as a dependent on mom and dad's tax return last year. Now you're saying, no, I'm going to file my own return because I want my own stimulus check.
Okay.
Well, you can do that, and there's things called rebate recovery credit so that if you didn't get it, you can get it. But it's a lot of confusion, and then people are playing games with, hey, did I make more money in 2019 or less in 19 than I did in 20? So they're holding off filing. So it's a big mess, this whole stimulus check thing.
Mr. CFP, there you have it.
It's
Insurance guru, what you got, brother?
What I got. It's
going
time.
on?
Well, we're here as part of the real estate trifecta. Insurance is tied to everything you do.
100%.
We're going to talk a little bit later probably about interest rates. So as long as interest rates are good,
Okay.
people are borrowing money, they're buying houses, they're refinancing houses, insurance, we're going to stay busy. We're going to help them out.
Excellent.
Make the homeowners insurance as good as we possibly can. And of course, you come to me, to the insurance guru, we're going to try to bundle you up and save you as much as we possibly can. And most importantly, make sure you are properly covered.
I love that. That, again, we can go, your topic, you alone, as far as protecting your assets, brother, we can go on for hours and hours. But there's a lot. First and foremost, I'm pretty sure you guys noticed that there's a big banner in front of us right now. And I want to give a special shout out to our new sponsors. Give it up.
Give it up. Give it up.
RCG Mortgage. I can't say enough about this mortgage company, especially me, as the real estate portion of this trifecta. We deal with mortgage. There's so many mortgage brokers and bankers out there in the industry right now, but it really helps when you have someone in your corner that not only gets the job done, but also supports you and your vision. So today is big business. Last time we were chopping it up, we were having a good time, but today is big business. I can't stress it enough. Today we have Andrew and Evan Russell from RCG Mortgage in the studio, about to chop it up with them. It's going to be really big. I want everybody to really tune in. They're going to be dropping a lot of gems, a lot of jewels. And, we want to make sure that we have them on a check-in on a regular basis just to make sure that we understand what's happening in the real estate market.
You got to keep them
people informed.
Absolutely.
The mortgage piece is important. People have to know. There's people out there that want to buy a house.
Yep.
Some of them think they can. There are people out there that are all jammed up in their current situation.
You don't need 20%.
You don't need it.
We're going to focus on that.
You don't need it.
Yeah, and especially, within, and I'm going to ask Andrew this when he comes on, but the processes of starting a mortgage company, like, come on, bro. This is not like I'm going to start like a car wash or I'm going to start a restaurant. Like, you are basically, changing people's lives and how you fund their dreams. A lot of us, as far as home ownership, it's really, really important.
That's where it all starts.
Getting us tied in with the best, because we are the best and what we do only helps us.
That's right.
As far as, trying to help our communities and, get people into their dream homes and, helping with their futures. But
that's what it's all about.
And a lot has changed, too, in the mortgage field, too, right? Like, you think post 2008, 2009, regulations have changed, licensing has changed. It used to be, just about anybody could be a loan officer, and that's not the case anymore.
I wasn't, I was graduating in 2008, so for me it wasn't, like, I understood what was happening, but it didn't affect me as much as a lot of other people were affected.
Right.
I was lucky enough to have a job coming out of college, thank God. And I was able to, I was still a young cat, still be able to do my thing. And
you're still young now. What are you talking about? I
these
was
grades,
young.
bro,
I was
this.
young.
Don't let the
Look
wisdom
at this,
fool you.
look at
Don't
this.
let
young.
the wisdom
Listen
fool
to
you.
this guy.
Don't let it fool you.
I think I got at least 10
Look at
years
this
on,
salt
right?
and
And this
pepper.
guy's talking about
when
I was young. But go ahead.
From a perspective.
I got you. I'm
you know what I mean? And it's crazy, now that with all the rules and regulations, Dodd-Frank, and we're going to get into all of this and how, the narrative right now, for some reason, I don't know why, the narrative is, I'm waiting for the next crash. I don't know why people keep saying that. Like, there's so much insurance back into these more, and we're going to get into it. We have the right people that are going to help us understand that today.
That's what we're here for. That's what we're here for.
But that is something you got to weigh out, right? It's like homes are at like an all-time high right now. Interest rates all-time low.
Oh my God.
So then, like, what do? Wait for the houses to come down, but by that time, the rates are going to be up.
Right.
So you really have to weigh that all out.
Understand this, gentlemen. I'm a Long Island guy. My office is in Queens.
Mm-hmm.
After the recovery,
Yep.
the housing market in the boroughs went crazy.
Right.
You had areas of the boroughs. I'm not going to single out Brooklyn, the BX, Queens, anything that people wouldn't have bought a home. And I said last week that my uncle owned properties, nice properties, low values. Now you can't start a conversation until they're way up here. Long Island did not experience that recovery.
Right.
Housing prices in Long Island were pretty flat until now.
Oh, of course.
It's a different game now because of everything that happened. People want to come out and they want to be on Long Island. So The timing that
They
we have
want to
today,
be out the city.
they want some space.
My goodness, like it is like it's a herd of buffaloes. Like I feel like I'm stand next to Kevin Costner dancing with wolves. Like you see a herd of buffalo coming out to like the suburbs, but
But you know what that means? It might be opportunity in the city right now. That's,
percent. I mean,
you
people
can't
that
follow the
own-
herd.
Yeah, landlords.
You think New York City is just gonna like?
Nah,
It's coming back.
That's the end of New York City.
Yeah. No. I think, from experience, I know people who have called me like, "Hey, what do you think about this 1-bedroom shoebox with 400 square feet of living space for $400,000 in, let's say, Washington Heights?" And I'm just like, I mean, for the city, technically at 400 right now,
Right.
That's cheap.
Yeah.
It's cheap.
That's cheap.
And
And
look
with
at
rates low, so there's the value, right? You got
Right.
low interest rates, and you have an opportunity. Let's say in some spots in the city.
Right.
Listen, the city's still expensive, right? For
100%.
when you compare what you can get for, what did you say, 400,000?
Yeah.
In the city compared to where you get 400,000 here, obviously there's a big difference. But there's opportunities there, I think.
Let me share my perspective. Yesterday, as we record this, yesterday was opening day, baseball
Yeah,
season.
Yankees.
Right?
Oh my God, I'm a Yankee fan. I don't know
Yankees
about
opened
y'all.
up. Mets
Not a big
fan,
baseball
proud Mets fan. Their game's postponed, but the Yankees opened up. 10,000 people in the stadium. What does that tell you? That tells you New York is going to come back.
Oh yeah,
That tells you Broadway restaurants are going to come back.
100%.
When there's something to do in the city, the housing market is going to follow. My business, we follow housing. We follow what's in the auto market. So I feel pretty strong New York will bounce back.
Yeah.
Okay, I agree. It's like it's New York City.
Right.
You can't take away anything.
Never.
It's the biggest metropolitan city in the world.
And the best.
And the best. Of course we're gonna say that we New Yorkers, but you know what I'm saying? Like, for people, I think, during the pandemic, that what's the word I'm looking for? That feeling of wanting to come, the enthusiasm of wanting to come to nobody wanted to be cramped up next to
Right.
anybody else. Like, the suburbs, property, again, going back to it, property value has surged. And today we got the right people to talk about it. But before we get into that, I need everyone's help. So if you're watching this right now, I need your help. My best friend,
Yeah, let's help
That's
him
your
out.
man, Zach, right?
my man Zach, right?
okay.
Zach, sure. He, speaking about the pandemic, has been affected more than anybody.
What's going on?
Zach is a hugger.
Poor guy. Oh,
He like hugging people.
all right.
He's just one of those guys that shows a
So
lot of love
the social distance thing isn't
Zach
working
is here
for
with
him.
it. Zach is here.
all the time. So
Okay,
I'm
okay.
gonna put a picture of Zach's face up on the screen. I want you to see this guy. The guy you're looking at right now is an amazing dude. Good all around guy. He's a hugger, and I want to kind of give back to my boy Zach. So I'm gonna hold a little contest.
Okay.
The first person that can send a picture of you giving Zach an air hug, $25 gift certificate to Starbucks.
Oh,
The
nice.
best one is gonna win, and we'll publish that picture on the next episode of the.
And we got a hashtag something like air
Hashtag hug
Air
Zach.
Hug Zach. Yes,
Air hug
air
Zach.
hug Zach.
Air hug Zach.
There you go.
That's
and
the
tell him I said hi.
That works.
But getting back to what we were saying about our guest today, Titans. I mean, big dude. I mean, not only in size, but in business as well. We're gonna have them on shortly, but right now we're gonna get a word from our new sponsors.
The first step in obtaining a loan is determining how much money you can borrow. When buying a home, you should determine how much home you can afford, even before you begin looking. By answering a few simple questions, we will calculate your buying power based on standard lender guidelines. Getting pre-approved ahead of time and accurately allows you to look for properties within your price range, be in a better position when negotiating with the seller, meaning the seller knows your loan is already approved, and close your loan quicker. For more information, please contact my team and I.
Welcome back. Quick word from our new sponsors, RCG Mortgage, best in the business. And I gotta take this second real quick, because this is very, very important to me. Not only am I happy that these gentlemen are going to be sponsoring this show, I have to give a big, big thank you from the bottom of my heart. We do big things. This is big business. I was able to purchase my home, and I purchased my home, my second home, through RCG Mortgage, and these bottles are a token of my appreciation. My brothers, thank you very much. As I introduce Andrew and Evan Russell, can you please pass these bottles down to these brothers, please?
I got that.
Little Dawn, little Dawn for my guys.
Are we opening? We're opening these now? Is that what's going on?
I truly appreciate you guys.
Don't
choke glasses.
Don't shoot.
I truly appreciate y'all. You know, I can't speak about, you know, the level of commitment. There was somebody else who's not with the company anymore too. She was involved, but you know, I thank her too. But these guys were monumental in helping me and my family get to a place where, you know, the guidance, the professionalism. I can't speak. It speaks volumes. I thank you guys from the bottom of my heart. Thank you. Andrew and Evan Russell, what's up?
Welcome.
What's going on?
Oh, shouldn't it be like this more? Goodbye, Dom.
That's me at 4 a.m. now, trying to feed Mateo. So, you know, now that we got a little bit more space, it's one of those things where, you know, I'm running around. It takes me about 20 minutes to get to my kitchen now. So, bigger house, bigger family.
Bigger blessings.
Bigger blessings. Like. Yeah, man.
It's a long way from Harlem.
Oh, my God. Yeah. And, you know, as a real estate agent, and today's topic of discussion, we're going to be focusing on, you know, starting a mortgage company and the processes of making that oiled machine run. You know, so we have two of the best, obviously the president and the vice president.
Right-hand man.
Evan Russell.
Yeah,
and that's what it is. So, you know, jumping right into it. Drew, is that okay if I call you Drew?
Whatever you want, Lo.
This is a casual setting.
Yeah.
Relax.
Bro, you went out. Like, I know for a fact you're a really smart dude. A lot of people, you're a really smart dude. How does the process go into starting a mortgage company? I'm gonna start a mortgage company and I'm gonna change people's lives. Like, what does that entail, bro? Like, how did you start? You know, what are the intricacies of, you know, what you do? And you supporting the communities. Like, how do you give back?
That's a great question. First and foremost, thank you guys for having us. Obviously, we're huge fans. We're super excited to be able to support you. So, I mean, look, there's the business side of anything in life, and then there's just like what you do for a living. So being a business owner is very different, obviously, than just doing mortgages. So I just think to be successful at anything, you have to have a business plan. You know, so some of us are blessed or cursed with OCD. I'm definitely one of them. You know, we got a lot of 3-letter acronyms between the lot of us. But specifically, like, so to be successful, again, you have to have a plan. Like, in other words, you're maybe rocking it. I sure am rocking the dad bod right now. So 100%. There might be a time I don't want to rock the dad bod anymore.
I got to talk about that too. But I got to make a promise live on this podcast.
Dude, I'm going to double time that promise. I'm trying to flex these old things, right. You know, like it's getting a little looser. But like, you don't just like organically wake up and just like lose weight. You have to have a plan. Right. Some people get a trainer. Yeah. Right. So it's the same thing with owning a business, I feel like. So, you know, I've been in the business long enough. You know, I gave it an opportunity. There was a lot of people, you know, the Arnold thing, the naysayers. Sure. I had millions of naysayers. Don't do it. It's really hard. The regulation. You're going to fail. You're going to fail. You're going to fail. And I'm sure all you guys, when people say that, that's when, like, you really dig it.
Oh, 100%.
That's a challenge accepted.
Motivation.
Right?
Thank you.
Absolutely.
100%. You know, so that's all I did is that for me to be successful, it's multifaceted. And even more so than just mortgage, you know, I could be a great mortgage company. Evan could be the best loan officer, you know, in the downstate New York area. But like, I could do something wrong from a business owner perspective. The company could close. Yeah. Right? And then it's all for nothing. So
correct.
It was just being meticulous, taking the time, taking a step back, really strategizing from a high-level business plan. What does it take to be successful? You know, seeing people that weren't successful, what they were doing wrong. Seeing people that were successful, what they were doing right. Kind of taking that and making it my own special flavor. You know, that's really like a high level.
Okay. You're the president, right? This is, you know,
that's what they call me.
Of course. You know what I mean? I call them Big Sexy, but that's just me. You know what I mean?
Understandable. That makes sense.
True story. When I met Drew, we were at the Ferrari thing with ASOS, right? Yep. I don't even know how, I was maybe about, I don't know, maybe a year in or something like that. And Zach was like, "Oh man, you got to meet this guy, Drew Russell." I was like, "Okay, yeah, all right." Well, I don't know nobody. You know what I mean? I didn't understand that.
You didn't know him. He shoots fireballs from his
bro. Because we had been approached by so many people because we've had rapid success, and we've been doing well since then. And I remember, I didn't get like this dude Drew is a big dude, and I remember, yo, Carlos, what's up, man? How you doing? And I was like, who is this? This dude, I swear to God, I was like, oh my God, I'm speaking to Thanos. Like, I'm
Show me your
speaking to
rings.
Thanos. Thanos gave me a handshake. Like, you ever, like,
Swallowed.
his hand swallowed my hand. I felt like Frodo Baggins standing next to Drew, but it was so cool because we chopped it up and we were standing next to like these $100,000 cars, and you were just explaining how, what you do and how well you do it. And I didn't get it at the time, but I definitely understood after the fact and doing business with you. And you're at the, you supervise everything. Like, how do you manage so many, because there's so many intricacies in what it entails to run a mortgage. You have the loan officers, you have your processors. There's a lot. Like, you manage a lot of people. Can you go into that a little bit?
Yeah, absolutely. And look, the high level OCD definitely helps.
Right.
The type of guy you text me, and unless I'm sleeping, I'm always answering.
100%.
We're definitely special breeds.
100%.
But it's just one of those things. So like, I thought when I was doing mortgage through my career, like I got a lot of referral business. Why? Because it was like the Andrew Russell experience.
Right.
Okay.
And I'm not that guy that sits and pounds my chest. And
Right.
But like, if I was a client, it's empathy, right? So like,
Sure.
my background, I have a master's in psychology.
Okay.
So I don't have a business background per se.
I'm gonna say less.
Watching
I'm
you.
always looking.
I'm gonna
Watching
say
you.
less. I'm gonna say less.
This is the trust tree.
Right,
You're over
right.
there, bro. You're over there. This is the trust tree.
Outside. You're outside.
Go ahead. Yeah. No, I got you.
But like anything in business, you want to empathize the client experience because that's what it's all about for you,
Right.
as a referral partner for these
100%.
guys.
100%.
So I tried to replicate that to build a conveyor belt, to build a company to
Sure.
have that experience, which I think I was a little successful at to be able to grow to where I am today. So it's just little things. This wise person once told me, that's to my left, that you have to get. And
We're going to get into Mr. Wise Person in a second.
Putting business aside, so I am the oldest in my generation in the Russell clan.
Okay.
Evan
You guys are cousins.
We're cousins.
Okay.
Yeah. Evan is actually the youngest. So
Wow.
there were 3 sons, right? So my grandparents allegedly went on a blind date. Second
It sounds
date.
like a mythrical, legendary
it's
tale.
not.
This is real. This is
Somewhere
our
right
life.
now.
This is our
No,
life.
literally, somewhere right now.
This happened in Glen Clove.
No,
We were in the town of Glen Clove, and they met.
in Boca. Somewhere right now in
Boca.
Boca, Florida.
That's right.
Is Dan Russell, right? I named my daughter Daniela after Dan Russell. True story.
Okay.
So he met my grandmother. I don't know why we're spinning into Poppy, but we have to,
Have
right?
to.
We have to.
Talk about the Russell
Poppy
clan.
and Natty,
It's
bro.
important.
Poppy
Go,
and Natty.
go.
Killing
I
it.
wanna know
Killing
about
it.
That's
Poppy.
it. Let's go.
So he met my grandma in the 50s. She thought he was obnoxious, straight obnoxious on the first date. And he is, 100%. Very sarcastic. Second date, he actually asked her to marry him.
Wow.
Talk about a man that knows what he wants.
Yeah. Woo.
So
She must
fast forward a few years.
influence.
She had, in her early 20s, 3 sons within 3 years.
Wow.
My dad is the oldest. Evan's father's the youngest.
Okay.
I'm the oldest of my father. He's the youngest of his father.
All right.
Right? So just to put RCG, which is Russell Capital Group,
No
Russell,
doubt.
into
Yeah, yeah.
perspective.
Of course.
So
Family business.
although Evan is a couple minutes younger than me, unfortunately, he's quite younger, and I'm starting to feel like the old guy in the room at some point. He's very, very wise beyond his years, and I've always told
100%.
him that. So, like they teach you in life, like there are some people where like things you don't know about yourself, or things you know in general. Like if you're lucky to have them, friends and family in your life, to be able to open your eyes to that, and you're humble enough to receive that, you'll grow as a person. I can say that Evan is definitely in my life that specific person. This is actually the best man pitch for his wedding that I'm practicing.
Okay.
That's right.
Yeah,
And we're
I
going
just
to
wanted
get
to
into
get
that
the feedback
too.
and see
I got
because
you.
I don't want to embarrass him, but it's the truth. So Evan actually one of the times, we always strategize business planning, 5 a.m. on the WhatsApp.
Love that.
Always
Yep.
hitting the WhatsApp up.
Yep.
He's like, you got to get the right people on the bus. Once they're on the bus,
Your
you
support
have to
cast.
put them in the right seat.
Sounds like the Wu. Wu-Tang did the same thing.
How
RZA,
about
you're
that?
the RZA
him around.
of RCG Mortgage.
Dude, he is.
about it.
Love that.
He's definitely is. So, it's one of those things. So, mortgage is very much milestones. We are milestone driven. Like, speak to the client, give a great experience, know what you're doing, get them pre-approved, speak to the realtor, keep them in the loop. Communication.
Right.
Communication right now is what
100%.
helps you stand out.
100%.
You know, they go into contracts. So from there, there's all little milestones, sending them the application, going over the numbers, making sure it makes sense, making sure they're comfortable, understanding the psychology of a sale. They're nervous. They don't know mortgage. They're a police officer, a fireman, a teacher. They don't know, like mortgage guys, typically we talk to clients not like they're human, like their applications.
Right.
So I have my staff and Evan,
agreed.
we talk to them like they're human.
Agreed. So, and that's go ahead, Kevin.
Now, you're literally describing the conveyor belt right now. So before you said set up a process like a conveyor belt, and now you're walking us down a conveyor belt. But I had a question for you. Something jumped out at me when you talked about the name of the company. I thought it was interesting that you named it Russell Capital Group instead of Russell Mortgages. There's obviously a bigger vision here.
Correct.
Yeah, so it started at Russell Capital Group. We DBA'd to RCG Mortgage just because I felt like at some point I was going to have people and they wanted to brand like a mortgage company. But yeah, I started this company for myself, for my production, to build a team how I thought. And it wasn't just like a company to hire a lot of salespeople and make a few dollars here and there as a side project. This is like my name. I want the accountability. Like I want to be like 4th and 1. I want to have the ball.
Yeah.
It's just I'm the type of guy.
Of course, and I'm going to be honest from experience because you are one of my preferred mortgage lender. You know what I mean? Only because of everything you described as far as that human element, that touch that no one has, and I want to transition into my boy Ev. Mr. Engagement.
Appreciate you.
Mr. Engagement.
I'm trying, man.
Yeah.
I'm trying to grow up like to be just like you, man. That's what I'm trying to be.
Salud, where's the dog?
Salud, right, where's the dog? We're going to pop a bottle right now.
It's gone.
Told you we were popping.
Right. So, I'm a strong, I support teams. I support the people
everything.
you keep around. Like I said in the first episode, my success is predicated on the people that I keep around me. Kev, Lou, Evan, Drew, my attorney who is going to be on the show at some point, Asaf. These are people that I keep around me that I make sure are going to be able to help me handle my business to the best of my ability and their ability. So it makes my job easy. You, my friend, I talk to often. Sometimes it's a little uncomfortable at 5 a.m. Like, yo, what you doing? You know what I'm saying?
That's might feel a little uncomfortable, right?
And my wife Vanessa and Evan are good friends because they both have that Miami, Florida vibe. You went to
I'm not
school
from Miami. No. My mom was born and raised, so
right. So you spent a lot of time.
Spent a lot of time growing up, so I love
all right,
the area.
cool.
Okay.
So New York. You guys are from New York.
Yep, absolutely.
Born and bred. Okay, great. With the amount of volume that comes into your office, with mortgages, different stories, different qualifications, the wheel, the conveyor belt that needs to keep going in order to keep the business running. I feel like you're a big component of that. Can you talk a little bit about that and what you do and how you service the communities as well?
Definitely. I mean, I want to touch on a few things that you kind of just jumped into, for sure.
It's a lot. It's a lot. We big business today. It's a lot.
Absolutely, man. I want to touch on a few of those things. And the first thing is, what you said last. Absolutely. I've been put in a position to keep the train on the tracks and
100%.
Kind of help run this company.
No doubt.
Alongside, Andrew,
family
founder,
company.
The family
no
company.
Family
yes,
company. Love that. Love
legacy,
that.
you know what I'm talking about? So, no, that's all important stuff. Fortunately, was able to be put in that position in order to grow myself and grow the business too. But what you said first, team, right? Team is everything.
Of course.
You have teams with these guys here, with us, with all of us here.
100%.
And then we have teams within the team, right? You have your team,
right.
Lou.
Yep.
Kev, you have your team. Carlos, you have your team. Yep. We have our team ourselves, 100%. Right? There's nothing more important than the team. We're football guys, if you couldn't tell.
Oh, really?
I seen something with Team Titan. Talk about them dogs. What about them dogs? You said 4th and 1. Let's talk about them dogs.
That might be
boy
another time.
Marlon.
That might be another time.
My boy Marlon.
I could talk for days about playing football, but man, the team is everything. And no, being a sports guy, there's nothing more important than that. Those characteristics, those character traits that you get when you're on a team, right? That discipline, that motivation, that control.
100%.
That is super uber important, right? And that's a part of how you keep the train on the tracks. Number one is by hiring the right people.
100%.
Like Andrew said before, right?
Yep.
So you find the right people. And they might not be in the best position possible when you hire them, right? So you find and you mold, you talk. Like Andrew said, we do a lot of game planning. He likes to be up at weird hours of the morning, messaging me. And
Successful people are up at 5, bro.
I have my pee in the morning. I'm awake. That's it.
You
I'm
go.
done. The brain goes. I ain't going.
So you got 17 business plans. To put
Throwback,
down
you
on
have
paper.
your tea in the morning, or you have your pee
No,
in the
no.
morning?
You listen. All you guys know, you're waking up between 3 and 5 for your old man pee in the morning.
You
I don't want
gotta
to
go.
hear it.
He's got to go.
Sounds familiar.
You got to go.
100%.
But you know, as far as you know, the conveyor, like the people that you keep around you.
Absolutely.
You know, can you take me into like what happens during the process? You know, my name is Mr. You Don't Need 20%.
Yes, sir. Yes, sir.
And
Very
if you
important.
thought you needed 20%, you played yourself.
Played yourself.
You played yourself.
Congratulations. You got to be honest with me.
yourself.
So you do not need 20%.
You do not. And can you describe some of the different programs as well?
Yeah.
Because
And this ties into just life in general, and I'm going to bring Lou into this as well, please.
Oh, yes, absolutely.
Because Mr. You don't need 20%.
That's me.
There's a reason why people think they need 20% or
Correct.
however much they can put down, right?
Correct.
And that was the 80s.
Right.
When rates were, you know, and I mean,
10.5%.
I'll age myself in a good way. Not that I was here then, but but they were pretty damn high, right? Over 10%, right?
10%, yeah.
How high did they hit?
12.
That's crazy. That's insane, right?
I think
Rates
when
were
my parents bought our first house in Brentwood, it was north of 13%.
Wow.
13 and a half or something like that, 1981.
that's a lot of money.
You put into perspective when people are like, it's in the 3s. It was in the 2s. Oh, they're so high all of a sudden.
Yeah.
You're at 3.2, and you think it's the high. It's the highest you've
That's
ever
it.
seen.
We're not buying it. They're too high for us. All right.
We'll rent for another year.
But that's the thought process, right? And that's because our parents and our parents' parents, that's what they did, and that's what they instill in us. For whatever reason,
Right.
even in the age of technology where you could look anything up immediately and research,
Sure.
children still, or not children, just people, you know, are going to listen to their elders. And it shocks me how many people still call and say, I need 20%.
So let me ask you a question. I'm listening to, we're talking about 08 to 09, we're talking about now. And you know what I'm thinking, being a person from a different sector?
Yeah.
There's still a lot of people that don't know what a mortgage bank is or a mortgage
A
broker.
mortgage broker. Okay,
They
yeah,
think
that's a
they
great
have to
question.
go to the bank. So what do you say to
great
people
question.
that think they have to go to the bank to get a loan?
Yeah, I mean, so Andrew, go back in history too, right? I spent the last 11 years. How many years have you been in this industry now?
2011 you started.
Yeah,
almost
and you've been in this industry how long?
07.
Yeah, so I mean, between the years of experience he has on top of the years of experience that I have, a lot of which was spent together at different companies,
Sure.
mortgage bankers, mortgage companies, mortgage brokers now, right? We figured out, and Andrew figured out, which is why he started the company
Gotcha.
as a mortgage broker, that this is the best platform for the consumer and for us as the professional for many, many reasons, Now, the number one thing that is super important is flexibility. As
Right.
far as we're concerned, as a mortgage
Yes.
broker, we're flexible. We're flexible for a multitude of reasons.
Legally flexible.
Yeah.
For a multitude of reasons.
Some of these banks
Well,
out
listen,
here, you be
listen.
like, wait a second.
There's a difference. There's a difference between a mortgage bank, a mortgage company, and a mortgage broker. And
Right.
to sum it all up, let's call the mortgage banks Chase, Citi, Wells. These are the retail banks. Let's call the mortgage companies loan originating entities, right?
Sure.
I'm not going to name them here, but there's a lot of them around, right?
We get it.
And then you get the mortgage broker, and that's the flexibility I'm talking about, right?
So a lot of people think that coming to me first to look for houses is the first step in the process of purchasing a home.
Yeah.
That's like the
Andrew.
third.
Get him,
fourth-
Andrew.
Nah,
Get him.
No.
Get him, Andrew.
Drew, talk, because I tell everybody, you need to talk to Mr. CFP first. Like, I need to know what your status is. So I'm the third or fourth option when it comes to, purchasing a home. Can you touch on that?
Yeah, I
Drew?
mean, it's to your guys' point. So, like, most people that go to buy a house have already purchased or leased a car.
Okay.
Right? So that
enough.
experience many times is, and like, not even close to a correlation to buying a house. What do? You're like, oh, let's hit up Lexus. You like take it out. You're like, yo, you got the new GS, bro. And then,
Didn't even hit the market
you
yet.
take it out. You get a nice, but right with your girl, you're thinking, oh, I'm gonna get a Lexus finally. I'm gonna move up from whatever car I have.
Right.
Right. And then you go back, and then it's like, all right, let's then see if you qualify for the car now. And then there's like a finance guy. They try to upcharge you. It's the exact difference. Like
Right.
it's a complete opposite. So like, you don't want to go see that house first. You don't want to fall in love with that new car. No, that new house first.
Right.
As a correlation, it's the opposite because like you're going to go with the realtor. You're going to see all these houses. And then guess what? You're going to make an offer. Oh, where's your pre-approval? Oh, give Evan a call. You're going to call Evan. And he's like, and you're like, oh, wait, you're self-employed. You write off all your income. You don't no mortgage for you. And then it's like, you were just like, wow, I saw my kids in that school. I was swimming in that pool. That pool. I was using that Weber barbecue.
Oh my God.
Right? And it's just like,
I sat on the patio furniture.
I was feeling it. But it's like, it's an emotional journey, so it's the opposite. You have to speak to the finance guy first before you test drive the car. You have to speak to the mortgage guy first to make sure you can afford it. You know, I have two people, typically in my career, there's two types of people that try to get pre-approved. There's type A, which is, Andrew, I want to the exact dollar that we can qualify for, and if my husband has to work 3 jobs, he will.
Jesus Christ.
That literally, it still exists.
Oh my
Congratulations, you played.
Congratulations.
Now you get it. But there is that type of person. Person
my
number
God.
2 is, Andrew, me and my husband wanted a payment of $3,000 or less, or we won't be able to afford date night, right? The smart, the savvy purchaser, right? So that's what you have to get into those conversations first. You know, Evan takes those calls. He has great consultative. It's more of a consultation
100%.
conversation to see, all right, what's your purchasing power? What works for you? Down payment, all that good stuff. And then you see the house. So, you know, to your point, do not see that house first. Do not call Carlos to see the house first, because you have to make sure you can afford it before you fall in love with it.
$10.99. Trust me, my time is precious. My time is really precious.
Save that.
Yeah. Give us an opportunity, right? Have a conversation, start talking,
So
figuring it
we
out.
stay right here. So we're using a conveyor belt as an illustration.
Yeah.
You guys are the first part of the conveyor belt in the
100%.
home buying process. I'm last. I'm
There
the
you go.
insurance. I'm the last thing you need before closing.
Yeah.
What else are they doing? So they talk to you first. Maybe
Correct.
somebody comes to you. They don't have the best credit. They're sitting on 600. They have this dream. How do you move them down that conveyor belt?
Yeah, well, I mean, we've had an opportunity. I mean, there are people who do credit repair.
Yeah.
We work with some individuals whom handle that, but largely
In-house or out?
no, not in-house.
Not-
Other
I don't know.
companies.
I don't know the intricacies.
Yeah,
I
no,
don't
other
know that
companies.
one.
There are credit repair
Yep, okay.
companies
All right.
and individuals that we work with
Yep.
here and there. It's not something that we dive into too much because we have a lot of knowledge ourselves, and we can help individuals with their credit, give them certain tools and advice, and that's back to what you said. Give us a call. Let's have a consultation and start talking about what you can do to get yourself there, maybe if you're not there yet. And that's the beginning part of that process.
I'm sorry, I don't mean to cut you off, Lou.
No, go.
I got to touch on this because
Yeah.
we've had clients where we have been working for 6 to 8 months.
Yeah, that long,
before
man.
they've even gone
Years.
out to start looking for houses. I've sat with Evan and we've worked with people to try to get them to where they need to be, because remember, it's not just a home buying process. It is a life-changing process. It is one of these things where you're going to be in touch with people that are going to help you turn everything around. Insurance is a big part of it. Finance is a big part of it. And it's not one of these, oh, well, you know what? You weren't pre-approved now. That doesn't mean you're not going to be pre-approved later. Like if we're talking in January and it doesn't work in January, come see me in October. Come see me in September, sometime around there, because you know what? This year can still work. This year might be able to work still. So we've had plenty of people that we've worked with.
We pre-approve people on the spot in
100%.
13 seconds,
Wow.
Otherwise, we pre-approve them in, like you said, 10 months, a year. I mean, it all depends on the current, the person's situation. But, I was going to say before, too, about, bringing you in, Lou, is when I speak with clients in that initial consultation, we get them pre-approved. We talk about how much money they're putting down. Maybe they do have 20%. Well, listen, I'm not a financial professional, but I tell clients, all right, you're looking to put 20% down. You're 33 years old. Maybe you don't put 20% down, right?
Yeah.
Maybe you speak with someone
And
like Lou.
sometimes it makes sense to do that. Sometimes
Yeah.
not. Listen, and I think a lot of the times, not a lot of the times, although it's not discussed as much, people are trying to avoid the
PMI,
private
that's
PMI,
it. Yep,
right?
that's what they want.
So they're like, hey, if I could save a couple of $100 by coming up with that 20%, then it makes sense. So who does it make sense for? Well, maybe somebody who is close to that 20%. Well, maybe waiting to have a little more money to put down, you could avoid that PMI insurance.
Sure.
So I have those discussions, and I talk with clients about debt-to-income ratios. I work with a lot of clients, young clients who are 1099. To your point, I was listening very closely. Like, they want to write everything off until they apply for a loan. Then they want to show all the income.
You're not swimming in that pool anymore.
And listen, the thing is, you really got to plan in advance, right? Because you guys want to see 2 years worth of taxes. They don't want to see your tax return this year where you're showing, net income of $100,000, but the last 2 years it was 35. You want to see some consistency there. Even and I'm gonna. This is a question, which I think I know the answer to, but you could, define it. If I had like 35,000 2 years ago, 50 now, and now 80, that's acceptable, right? It's not consistent per se, but it's consistently growing.
You're talking about income specifically?
Yeah, exactly.
Well, there's different ways of earning income. So, there's.
Well, for the self-employed, I guess I'm talking about. So, like for the self-employed, like we say, they want to write off everything every year until they buy their house.
The air that I
show
breathe.
Everything, and then they want to write everything off again.
Absolutely.
The air that I breathe.
Yeah, you want to take advantage. You want to take advantage of that, obviously. But when you go to look for a house, you get smacked in the face and realize.
Is what I'm saying,
definitely think ahead. But to what you respect to what you were saying, you don't necessarily need 2 years.
Oh, okay.
You can do 1 year self-employed, or at least we can. We have programs that allow that.
Good to know. Nice.
That's something that's important to know. But we want to plan. We want to plan. And right now in tax season, we're doing a lot of planning. I mean, we speak with a lot of accountants, right?
Right.
Yeah, I would describe self-employed now, if that's what you are for an income perspective, spicy.
Right.
Why do I say spicy?
Yeah.
Because think about it. So all it is the guidelines. So what are the guidelines? Typically, you look at last year's tax return, and that's it. So we're right now in March, April. So we just hit April. So say it's last year in September. Last year in September was 2020. So you would ask for, to your point, 19 and 18 returns. But what happened in 2020? So think about it. If you're a W-2 employee, if I work for your company and I have pay stubs, you get the pay stubs. You see how much you made this year to date.
100%.
Self-employed, there was pretty much nothing, typically. So now what happened? Fannie Mae, Freddie Mac, FHA, they realized that they're going to change that up. They're going to look at bank statements. Is there money coming in? We've had clients, and it just happened, right? But we've had clients where you look at the last 3 months' bank statements, self-employed, they made no money. They're not even open, right? So these are some of the newer guidelines. COVID, specifically self-employed, I would describe it that is where we really have to know the guidelines. You really need the industry professionals.
And this insurance-backed mortgages, is that what we're talking about? As far as a PMI? So
no, specifically if you are self-employed. I was giving the analogy if I worked at a
company.
Right.
Okay.
And I have pay stubs. Say I'm his front desk girl. Right? Killing it.
Good, looking good.
Hey,
very pretty.
Looking good, bringing the business in.
Yeah.
And he pays me, $1,000 a week, W-2. It's easy to figure that out because I get. But if you're self-employed, again, now it's not only the returns, P&Ls, balance sheets, right? Some people are I don't know how to do a P&L. I don't even know what P&L stands for, and we have to help them with that. Same thing with bank statements. You're in the restaurant business. Sometimes money wasn't coming in.
Profit and loss for those.
Exactly. Profit and loss. But, there's so much more that goes into self-employed now. So that's definitely a specific demographic that has suffered a bit with COVID.
Yeah, you say suffer, but the market says different. You know what I mean? Because it's been so hot right now. You know what I mean? People have been finding ways to purchase homes. Is this the busiest you've ever been? I personally have been super busy. I'm pretty sure you guys, as far as insurance and finance, real estate is on fire.
When I say suffer, I feel if someone calls me and they qualify, I want them to find a house.
Gotcha.
And so they're suffering only because, as you would know, especially if you're a listing agent, it is a seller's market.
100%.
It is completely 180.
Oh, my God.
There's no
Big
more rep and
rules.
warrant.
Yeah,
you want to see if my pool's good? No, the next person doesn't care, right? That roof? Don't even go on it.
Appraisal doesn't matter.
Appraisal, no appraisal. Right. So now is the time where we yes, we're busier than ever with pre-approvals, but those poor people, it's impossible. They need a guy like Carlos. What if they go to Zillow and get the wrong realtor? They ain't getting an accepted offer, bro.
Play yourself.
Right?
Find yourself the right agent. It's very, very important.
So we're doing very well, but it's difficult from an empathy, personal perspective to see, this guy and his family, they don't want to have to rent anymore. They want to buy that nice house, and they can't because that house on the market for $550, accepted offer $675. No appraisal contingency. Wow. How do you compete with that? You just can't.
Cash.
Hey, so I got a question for you guys too. We're talking about how hot the real estate market is, and there's a lot of young professionals out there or aspiring entrepreneurs, young professionals, and I hear two things all the time. I'm going to be a real estate agent. I'm going to kill it. Or I'm going to be a mortgage broker, banker, loan officer, and I'm going to kill it. Those
This is
are
good.
two. So do you have, like, these young entrepreneurs looking to get into the business? Number one,
Great question.
is that like a growth kind of field? And two, what are the requirements to become a loan officer? Because I could remember, again, it seems like a long time ago, but pre-2008, you get paid on a 1099. You really didn't even need any licensing whatsoever, and you could be a loan officer, right? That's all changed. So what are the licensing requirements? How are they compensated? Are they independent contractors, W-2? Break all that down.
I could talk about the licensing requirements. He can, Andrew can attest to some of the pay structures and things of that nature. Considering
I'm the guy that
business.
pays you.
So he's the pay guy.
Exactly.
That part.
You're the
He
compliance.
signs a check.
He signs a check.
Exactly.
Yeah,
So as far as as far as licensing and requirements, I'm very happy to say that. And mind you, I got into this business in 2010, right? And I was young at that time. I got in right after the crash, completely different. Some of the heavy hitters in the industry weren't able to hack it anymore.
Scorched earth.
Totally
at that
scorched
time.
earth.
Yeah.
Rightfully so, because a big part of the crash, if you've seen the movie The Big Short, if you haven't, go see it.
Yes,
Great movie.
great movie to watch.
You don't have to go, actually, anywhere. watch
Go to
it.
your living room.
No,
Have a
but,
seat on your sofa.
but I'm very happy to and pleased that it's a professional industry.
Yeah.
With the sense that licensing is required, and what entails licensing. Not only a very difficult test, maybe not as hard as the insurance test, but not only a very difficult test that you must get a 75 or better on, but also annual credit report checks.
Wow.
Annual background checks. I mean,
Wow.
listen, it makes sense.
So
if
and
you're-
this is on. So that's similar
Wow.
to what we have. And I
know that.
I think the real estate profession needs
Don't do
to
that.
have no.
Don't do that. We
Right? Listen,
We're professionals.
it is very
No, of
hard
course.
to
Weeds
be a
out the
good
crap.
realtor.
That's
It's very
real
easy to
good
get a license, though.
I mean,
No,
but
of
that's
course.
real good to know that there's standards, to know that you got in as a young guy. Question I want to ask, Lou and I were talking about this before we started. Lou's all about helping young people. I'm all about helping people, giving back. Carlos, in his introduction said, giving back to the community. How does a young person that's watching this show that wants to do what you're doing, but he has no idea what it's about, how does he get started? How does he fit into your team?
So the licensing, and I want to piggyback right onto that because I want you to finish that thought too, right? Yeah, how do they fit on your team? But what do they have to do? So they got to get a license, right? First, it's a state license,
okay.
and then there's like
I'll let Andrew jump
a
in.
national license, and then getting compensated because these young guys want to know. They want to make the money. They want to
Right.
Everybody
man.
does.
So in all the bougie national magazines, to your guys' point, there's always been a call. It's called a youth infusion.
Right.
How do we in mortgage or any space similar in these four walls have a youth infusion? It's really difficult, only because, which is a whole nother podcast, the millennial.
Yeah.
The millennial.
Oh, okay.
The millennial, like the Simon
about that on
Sinek
the
type
title shows.
comment where like a lot of, it's difficult with the entitlement and different things. So yes, there's a call for youth infusion, but then sometimes, it's difficult. That person has a different headspace than us in these four walls. So like when I started, I'm 39 years old, but I got the crappy leads. I
Right.
called them all. I
course.
turned, the bad into the good. I
course.
found diamond from the, the whatever. So that's the first thing. I find that out of every two, because we have a youth infusion in my company. I'll explain how. For every two millennials, typically one is not the best fit. So you do.
That's part of it.
Correct, which is fine. I guess it's any
Right,
employee
right,
really
right,
anyway. But there are such things as grinders and hustlers in that demographic, and they bring a lot of great things as well. Licensing to be a mortgage professional, it's a 2.5-day webinar. It's one test, but that's how you get a license specifically for. You have to apply in the States. So if you start in New York, it's a 2.5-day webinar, and then you have to study for a test. So it's really just a webinar and a test, and then they do background checks and different things.
Okay.
But to Evan's point, it's a very difficult test. And I know in insurance, you can keep taking your test until you pass. It's like $30. In mortgage, you could take it once every 30 days, 3 times. And if you don't pass, you have to wait 6 months.
Oh, wow.
So
Yep.
it's very, very difficult to get the license.
That's how CFP is, too.
There is opportunity, young people of America. Look on the.
He's talking to you.
I'm looking at you in the
Right.
face.
We want you.
You there, sitting on the sofa watching this podcast.
Yeah, look on the bottom and you'll see my information. Call me. But there is, because why? But it's also like the catch-22. So will a 26-year-old, 24-year-old, someone with their masters, will they be able to walk into Carlos's office at Signature and say, Hey, Mr. Los, my name's Bill Smith. I work at RCG. Can I have a couple minutes of your time and iterate my value proposition of why, since I've never done a mortgage in my life, you're going to give me one of your clients?
Sure.
You know, so it's like the ideal situation is you get them in, to your point, get them in, train them, have them buy into the culture, what we do, how we give back, all that stuff. Get them licensed, have them join a team like Evan did. Evan wasn't Tom Brady overnight. You know, Evan started like Sam Darnold.
Whoa.
Hey, I'm a Jet fan. Shots fired.
My bad.
Evan would be, what is it? Drew Brees on the Chargers. So he was always great. And then he went to New Orleans and then he crushed it.
Well, I believe in reincarnation. So.
No, of course. And then, you know, it's I have the pleasure, and this, you know what? This is going to any real estate agent watching this right now. You know, you'd be sadly mistaken if you thought, you know, these guys weren't the real deal, the big deal. I would tell you their information is going to be below. You can Google RCG Mortgage. Their information is obviously going to come up at some point during the show. But you know, if you guys are out there and you want to, you know, work with the best, surround yourself with the best, because these guys are the best. You know, anything else you guys want to add? I mean, what were your thoughts? How do you feel? Like, you know, what'd you think of the
great
yeah?
Right now. I feel great. Inspired by you guys.
No,
I'm
listen,
inspired by you guys.
Evan just got engaged. Shout out to Brett.
Congrats.
Yeah, congratulations, man.
Thank you.
He himself bought a beautiful home on the South Shore. You know, I guess, you know, close to the water. You jet ski, you know,
everything, man.
You're
Listen,
good?
I'm Long Island born and bred, but
Nice.
and I was a North Shore guy growing up. But
ended up in the South.
Brittany,
right?
my fiance, moved me to the South Shore, and I've been loving it ever since. You know?
She's doing good. She's doing all right.
She's great. Absolutely.
Yeah. Shout out to Brittany,
man.
man. Congratulations. You know,
thank you.
It's a family affair between us. You know what I mean? Because these guys, I talk to them often. It's hard to really differentiate business and friendship. It's easy when they both mix. You know what I mean? I can't speak enough about, you know, RCG Mortgage.
Appreciate it.
We discussed big business. So we discussed the giveaway. You know what I mean? Yeah. So these guys came on. They said, you know what, Los, I want to do something, you know, really big, you know, for the community. You know, we're talking big screens. So
Big screens.
And,
Like
you know, we're going to set off a raffle. Anybody that clicks the like button on our Instagram page, checks us out on YouTube, on our Facebook page, you click and like the page, and, you know, drop us a line. We will.
That's awesome.
Yeah, we will try to figure out how to
right
get
now.
you right.
I'm in.
At the real estate trifecta.
75
At the real estate trifecta.
Yeah, these guys are big business, and that's how big business supports people with visions. You know, never, if you got something on your mind and you want to get it out, make sure you're surrounding yourself by people that'll help you do that. So I want to thank, you know, Andrew and Evan Russell for being a part of the show. Thank you for sponsoring this vision. We look forward to having you on check-ins to let us know what's happening in the market. I think that's really important, especially from the real estate aspect of it.
The mortgage minute, baby.
I like that. The mortgage minute. I'm going to write that down. Hold on.
Right, the mortgage minute.
The mortgage minute with Drew, you know, and Evan. You know, we can definitely check in. We definitely do.
We need that.
And again, our information is going to be below. The Real Estate Trifecta on the gram, the Real Estate Trifecta at gmail.com, the Real Estate Trifecta on YouTube. Please check us out. And yeah, that's it. You know, chat you on the next one. Peace and blessings. Make sure to tune in next week as we have Kathy Viard and Peter Morris, owners and operators of Signature Premier Properties.